And let's bring on board the management of Indigo Paints. They've reported a good set of numbers, which is better than what the industry has been performing. We have Hemant Jalan, CMD at Indigo Paints, joining in with us. Thank you so much, Mr. Jalan, for joining in with us this morning. What I want to start by is talking about your margins, whether you look at the gross margins or the EBITDA margins. We have seen a good expansion in both these. Do you think that there are more tailwinds in terms of going forward, in terms of the outlook for the gross as well as the EBITDA margin? And what is the expectation that one could have for FY25?
No, I think as far as gross margins go, if you look at the last 12 quarters, we have led even the market leader in the industry by at least 3 to 4 percentage points in terms of gross margins. And gross margins, at least for the last quarter on a standalone basis, have touched 49.3%. And even for the full year, the gross margins are close to 48%. Now, frankly, I don't expect gross margins to go up any higher than this. We'd be very happy to retain the gross margins at this level. And if the raw material prices remain stable, as they have been for the last 9 to 10 months, I expect that the gross margins will hover around these levels, give or take 10 basis points here and there. As far as EBITDA margins are concerned, we had given a guidance in all the quarterly earning calls during the last fiscal that we do expect the EBITDA margin to increase by 1.5%. So last year we were at 16.9% and we had expected that it will climb to 18.5%. And that's exactly what we have delivered. Going forward, we continue to expect the EBITDA margins to climb, but not by 1.5% in the next year. We have given a guidance that we expect it to climb by anywhere from 50 to 100 basis points, depending upon the market situation.
Okay, that was exactly going to be my next question, but you've already answered that. But tell me, while your peers' revenue growth was around, 0.3 odd percent or so in the fourth quarter, you grew by 18%. Is this outperformance really sustainable, you think? And what's intended when it comes to market share expansion for you?
So we have been asked this question for the last 10 years, even when we were not listed, that, we have been outperforming the industry by a wide margin in terms of top line growth for the last 10, 12 years. Maybe one odd year in between, we may have tapered down to come closer to the industry growth levels. But we have been doing this consistently, and we expect to consistently outperform the industry growth numbers for the next few years easily by a factor of at least 3. And what was true several years ago remains true today. There is something different in our DNA, which causes us to be confident of outperforming the industry as far as revenue growth is concerned.
So, Mr. Jalan, just wanted to reiterate then what the outlook is. Can you grow 20% in FY25?
See, that depends upon the underlying growth on which we have no control. If the industry were to get back to its normal growth of 7, 8, 9%, we can certainly expect to grow between 25 to 30% in FY25. But if this tepid demand situation, which has prevailed over the last 3 quarters, if that were to continue, and we sincerely hope that it does not, but if that were to continue and the industry were to grow at 1 or 2%, then I think it would be fairly difficult for us to log in a 25% growth. So let's just hope that the demand comes back to the sector, the growth in demand comes back to the sector, and the industry comes back to its normal level of 7-8% growth, in which case we can certainly hope to get a 25% top line growth in the next fiscal.
Okay, Mr. Jalan. Right. The other thing I also wanted to ask about was your market share in context of the increased competition. You think your advertising spends are also going to grow further because of heightened competition?
See, the heightened competition, which has been a matter of much speculation in the last 2.5 years. Now, I think it is time that speculation gives way to hard numbers. The competition that you're referring to has already launched in the last 3 months. So far, we have seen no perceptible impact on either our top line or bottom line. As far as advertising spends go, whatever we do with our advertising spends has little or nothing to do with the entry of one other player. We have mentioned that we intend to marginally increase our total A&P spends by spending a little more on digital media, but still we expect our A&P spends as a percentage of top line to come down marginally in the next fiscal.
Right, Mr. Jalan, thank you so much for joining in with us this morning on ET Now, talking to us about your margins, your growth outlook going forward, as well as your ad spends. Thank you so much for joining in with us.
If you like this video, then like, share and subscribe to ET Now.